Tesla stock is getting punched in the face yet again today, falling over 2%. We have all of the breaking news that you need to know in regards to Tesla stock and what in the hell is happening to our favorite company. But first, before we get into it, we are drinking on the Splash Acai grape water. I don't know if you guys have ever had these things, but they are pretty good. Neither here or there, but let's go ahead and get into this video. Elon Musk is throwing a jab at Warren Buffett, saying he could have invested in Tesla when we were worth basically nothing, and he didn't. This is in response to this post from Wolf Financial on Twitter that said Warren Buffett is the greatest investor of all time. I guess you can't win them all, but when you choose GM over Tesla, not so great. Obviously, Warren Buffett is where he is today because he's good at his craft. Not going to downplay that, but I think we should highlight the fact that Warren Buffett just sold 45% of his GM position. This could be a sign of not so great things to come for GM and other legacy automakers. We will highlight this later on throughout the video. In the news today for Tesla, Bloomberg's, quote, sources are saying the refreshed Model 3 could start production next month in China. Quote, the electric car maker is in the final stages of producing display vehicles, which will be shipped to Tesla showrooms later in August. This comes after local media sources in China said the Model 3 Highland could actually start getting delivered in as soon as 2 weeks. And we pointed that out and highlighted that on the channel yesterday. I guess which one do you want to believe? Bloomberg or local China media? Let me know down below in the comment section. Tesla notified Australia's Core Lithium Ltd that there's a potential legal claim after their negotiations for a supply deal fell through in 2022. The first UK sighting of a V4 supercharger install took place today with payment screens at Tottenham Service Center. These chargers are game changer for Tesla, and Tesla's really just a game changer if you compare it to the chargers that are currently out on the markets, but this is another step up from what we have today, which is the regular superchargers. A new job posting for Tesla just went live. Quote, support the team on launching a small pilot in all Texas collision sites. And you'll see right here highlighted in yellow, lead in the launch of the Tesla rental program in Texas. And then Melissa Porsche, she works at Tesla, posted on LinkedIn, big things happening. But we will see what comes out of this. It could be big for Tesla stock owners, or it could be a nothing burger. We'll keep you updated. Apparently, option traders are betting on more downside for Tesla stock throughout the rest of this week.
Stick with EVs here. Tesla falling again today as the company announces price cuts to the Model S and Model X in China. The move comes after the company cut the price of the 3 and the Y. Options traders are betting there could be even more declines for the stock. Kelly Intelligence CEO Kevin Kelly joins us now with the action. Kevin.
Hi, Melissa. Well, today we saw 1.06 times the amount of puts traded versus calls, and that got stronger throughout the day. Now we're heading into an options expiration on Friday, and we actually saw the largest contracts traded today were the at-the-money puts. And so you saw over 118,000 puts traded for the $225 strike that expires this Friday, and they were trading at the end of the day at $3.
And the RSI is at 30.83. You tend to get bounces when the RSI is at this level. The only time you've really seen Tesla go really oversold, like deep oversold, was back here in December of 2022. And that's obviously when Tesla dropped from, $200 down to $101. Besides that, you were not that oversold since May of 2019. So it does not happen that often. You tend to bounce at this oversold level on the RSI. So that leads me to believe that we're probably going to see a bounce in the short term, but downside over the next couple of weeks, especially if some of the next biggest upcoming catalysts for the markets are negative. Biggest one that I can think of offhand is Nvidia earnings and Jackson Hole, the Jackson Hole Symposium with Fed Jerome Powell. But if Nvidia earnings are bad, it's going to drive down the entire markets. And if the entire markets fall, Tesla stock is going to fall more than the markets. And you're in reality just a jump, skip, and a hop away from $200 per share. Now, some people might not like what I just said, but if you're a long-term investor and you really want to make money, reach financial freedom, all of your financial goals, this is what you want to see. The lower Tesla goes today, the more of a home run this is for next year and 2025 and 2026 and beyond. Where things could get really ugly for Tesla is if Tesla cut prices in the US and in Europe. It's understandable why Tesla is cutting prices in China on their higher end models, but it wouldn't make as much sense if they were cutting prices in the US, to a lesser extent in Europe. It looks like China is kind of doing the worst on the global stage, or is going into one of the worst slowdowns they have seen in a long time, with really no signs of recovery, not to mention the other problems that are going on in China, like the real estate bubble that has burst and issues with financial institutions. So that's where things could get really bad for Tesla stock if they cut prices in the US. And I'm just unsure if that's going to happen. If Tesla really wants to drive this price war home and cause an actual price war, then more price cuts are to come. That would be to Tesla's long-term gain, but in the short term, it would decimate the stock yet again. But if you're GM, Ford, or Stellantis, well, small price cuts might look like a good thing, because the looming auto worker strike could cost $5 billion in just 10 days, according to a new analyst report. Some independent studies and reports are even suggesting this could affect the US GDP by 0.5% or as high as 2%, depending on how long this thing actually lasts. Bad news for GM, Ford, and Stellantis, as well as potentially the broader markets and the broader economy. Something we need to watch very closely. Speaking of Ford and its partners picked Canada for a $900 million battery materials plant. A consortium of Ford Motors and South Korean companies on Thursday said they would build a $1.2 billion or $887 million plant to produce electric vehicle battery materials in Quebec, which is seeking to become an EV supply chain hub, Canada's industry ministry said. The factory will eventually produce 45,000 tons of cathode active materials per year for Ford EVs. If only Ford could actually make a profitable electric vehicle, then this might actually mean something. But even by 2026, Ford is still going to be losing money on every EV they sell, most likely. The Tesla Supercharger network has ranked first in J.D. Power's 2023 U.S. Electric Vehicle Experience public charging study. This is based on overall consumer satisfaction and is based on a 1,000-point scale. And Tesla obviously comes in at the highest with 739 points. Your segment average was 654 points. ChargePoint was 606 points. EVgo was 569. And Electrify America is 538. Tesla is far superior in every field that they are in and will continue to be far superior, especially when the Cybertruck comes out. Boy, is that going to be a big one. California has added another $2,000 in incentives via EV credits for residents. Now, all in total, you could save $17,000 or more for qualifying residents in California when purchasing a new electric vehicle. This article from Benzinga is pointing out this fleet of Cybertrucks that we have been watching closely and said it could be en route to Michigan, my home state, known for its numerous vehicle crash testing facilities. This comes as Tesla is undergoing final validation testing for the Cybertruck, anticipating a delivery event by the end of the quarter. The sighting of numerous trucks on the move points towards Tesla's progress towards this goal. And again, I would like to point this out because Benzinga is pointing this out today, what we covered yesterday. And that is that Elon says they will be testing FSD Beta V12 and live streaming this drive with Elon Musk next week. Well, Benzinga says that Musk actually said in June that version 12 would no longer be beta. For some reason, people don't know that. Down below in the comment section of these videos and other places that I see, people make the argument that V12 has never been promoted as level 4 autonomy, and that's absolutely false. V12 would no longer be beta, according to Elon Musk. FSD is in beta mode currently, meaning it is still being tested and requires active driver supervision. During the 2023 World Artificial Intelligence Conference in Shanghai in July, Musk also said that Tesla is very close to achieving full self-driving capability. This is just another catalyst on top of the Cybertruck, the refreshed Model 3, and others that makes you want to buy the crap out of Tesla stock heading into 2024. And that's exactly what I've been doing. Let me know if you're currently buying Tesla stock around the 220 level here over the past couple of days. Let's now talk about what's happening in the broader markets today. Stocks are selling off at the time of recording this video. The 10-year Treasury yields are up almost 7 basis points today, breaking out to a new high of this cycle. And this is actually crazy, because last time you were this high was back in October and November of 2022. In October of 2022, that's when the S&P 500 hit its lowest point. What bond yields going up actually does, it makes financing cost more expensive to get a new vehicle, to buy a house, your credit card payments, revolving lines of credit, anything that has to do with borrowing money becomes more expensive. Because think about it logically, nobody's going to lend you money for 5 or 6% when they can go out and get 4.3% in a 10-year Treasury. They're going to want to charge more than that. And depending on your credit worthiness, you'll pay a little bit more, you'll pay a little bit less, but still, point in being, it's bad for the economy. But what this also does is it drives down the price of bonds. Now, I talked about this in the last video. 2022 was the worst year for the 60-40 portfolio, 60% stocks, 40% bonds. Because if stocks do bad, well, usually there's a rush to safety, or a flight to safety, people call it, and bonds would do well. Well, what you have seen recently is bonds have done terrible the last 16, 18 months, and stocks have also done pretty bad. And even more recently, if you look at TLT, this is an ETF that tracks the 20-year bond, TLT has fallen almost 10% just since July 25th. That's a huge drop for the bonds. The S&P has dropped around 5%. When you put these things together, there is a real liquidity crisis that could be looming, because these losses are a problem. This, most notably, is what took down First Republic Bank and some of your other banks. It was all of these unrealized losses by investing in a bunch of bonds and not hedging out risk. Nobody thought this would happen. The larger the sell-off in bonds, the higher the interest rates go. Potentially the worse a crash could be for our markets. And it looks like today you're actually hitting the tipping point, and now bond yields are hitting a new high of this cycle. You can also see the yield curve is starting to steepen. This is the most famous 10-year to 3-month yield curve. Anytime this has went negative or under this black line, you have seen a recession. Every single time. Even back in 2019, in August, when nobody even knew about COVID, it still went negative. And people argue this was because of what was going on at the time, not necessarily because the markets knew COVID was coming. But Point in being, it still happened. So, where are we at now? Well, you're inverted the most on record. You're inverted 1.28%. But when the pain actually happens, it's when the uninversion happens. Note back here in March, or really in February, you were inverted, right? You were negative about 20 basis points, and then you started to uninvert. And what happened during this time in early March? The markets were crashing. Well, what you have seen recently is the uninversion has started. At the lowest point, you were inverted 1.88%. Today, you're only inverted 1.28%. The higher this goes, the steepening of the yield curve, well, the worse it usually is for stocks. So no surprise why stocks are selling off today. Twitter user Gregor Truck posted a picture that the Cybertrucks are now being seen on I-70 Indianapolis. He says, where are they going? Well, they're coming to me, my friend. My reservation is getting filled. I live in Michigan. That's obviously a joke. I am like 1,300,000 on the reservation list. So yeah, I'm probably not going to get mine for a couple of years. Point in being, they're coming to Michigan. They're being crash tested. And that's probably the final testing before we start actual deliveries. And odds are some of the vehicles that we have seen at Giga Texas, some of the Cybertrucks, I shall say, that we have seen at Giga Texas in the parking lot are likely, well, ready for deliveries. I believe they're getting ahead of delivering these vehicles. They're starting production now. They're producing these things now. They take a couple, they test them. If the testing comes back good and they don't have to make changes, well, they can start shipping out these vehicles. And they have a pretty good idea that they're not going to have to change anything. The crashing tests are really, the only time you'd have to change something is if something was really wrong. And like the vehicle just could not handle like a 50-mile-an-hour crash and just completely crumbled. And that's not what we've seen out of other Teslas, like the Model Y, the Model 3, safest cars that you can drive. You can literally drive them off a cliff and your whole family lives. Now, obviously, don't do that, but we've seen stories of that nature. Well, this is great news for Tesla stock investors, and this could actually be where the dip stops dipping. And I've said it that before, and I'll probably say it again. The Cybertruck's going to be massive, and the day that deliveries start, you don't want to have puts. You don't want to be short. You want to be as long as possible, in my personal opinion. As far as Tesla's option activity, you've seen 441 institutional orders worth about $230 million, positive order value of 21%. So a little bit lower of an option activity day to day. As far as hedge funds and institutions, yesterday was a huge day for options, where you've seen 875 orders totaling $2.32 billion with a positive order value of 45%. Now, it looks like, as per usual, retail investors are quite bullish when you take into consideration all of the option activity. 54.5% of the option activity is calls. This is in stark contrast to hedge funds and institutions, where 21% of their option activity is bullish. AAA study finds ADAS could save more than 8,000 lives per year. Dynamic systems could prevent millions of crashes if humans use them correctly. That equates to a 16% decline in both crashes and injuries, and a 22% decline in fatalities. Another 8,333 people per year on average that could make it home alive. Just in the time that we have been recording this video, Tesla stock is now down 1.5%. The sell-off is getting worse. Tesla stock just officially entered into oversold territory on the RSI. The reading on the RSI currently is 29.99, slightly under 30. So this could mean either a bounce is coming pretty soon, or if this sell-off gets worse, it could get worse very quickly. Again, I want to remind you, if we see further price cuts, especially in the US, that's where this thing could get very ugly. I don't expect that to happen, but if it happens, just know that would be very negative for Tesla stock, and that would open you up for the biggest buying opportunity that you're probably going to see for a very, very long time, and hopefully you have some dry powder ready at that moment. As far as tomorrow, we don't have much. We have John Deere earnings in the morning. I doubt that's going to be very impactful to the markets. Walmart earnings today were pretty good across the board, and that did not even help the markets. As far as economic data, we don't have anything coming out tomorrow, in particular for the US, but for the UK overnight tonight at 2 o'clock in the morning, you're expecting retail sales month over month for the month of July to come in at negative 0.5%. We've seen retail sales for the UK up and down. This could be important for just gauging the slowdown that we're seeing over in Europe, and that could cause a reaction to the markets. And then for Canada, we're going to be getting PPI month over month and year over year coming out tomorrow morning at 8:30 in the morning. You're expecting huge drops on the PPI, which is quite deflationary. You're expecting a 6.3% drop year over year. For PPI and month over month, expecting a negative 2.3% decline. This would be good news for inflation just across the border, and this could be very positive for the markets. And the sell-off is worsening even further, down 1.76 now at the time of recording this video, and the RSI is getting steeper, or deeper I shall say, into oversold territory. Ladies and gentlemen, that is going to conclude this video. Hit the like button and subscribe to the channel if you made it to the end of this video. My name is Michael Tyler. Thank you for joining me today, and most importantly, enjoy the rest of your day, and I will see you in the next one.